This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
Oil prices extended declines on Wednesday and were set for their largest monthly drop in almost 3.5 years as the global trade war eroded the outlook for fuel demand, while concerns over mounting supply also weighed. Retracing some earlier losses, Brent crude futures fell $0.49, or 0.8%, to $63.76 per barrel by 1002 GMT. U.S. West Texas Intermediate crude futures dropped 40 cents, or 0.7%, to $60.02 a barrel. So far this month, Brent and WTI have lost around 15% and 16%, respectively, the biggest percentage drops since November 2021.
China has waived the 125% tariff on ethane imports from the United States imposed earlier this month, two sources with knowledge of the matter said on Tuesday, among a group of products that have been granted exemptions. The move will ease pressure on Chinese firms that import U.S. ethane for petrochemical production as well as provide an outlet for the natural gas liquid, a byproduct of U.S. shale gas production. The sources said the tariff on ethane had been waived in recent days. One of them said the waiver has not been publicly announced. They declined to be named due to the sensitivity of the matter.
Moving on to the top news in the energy sector.
China's solar manufacturers reported losses this week as U.S. President Donald Trump's trade war put further pressure on demand in an industry where top manufacturers were already facing low prices and tariffs on exports to the United States. Top producers LONGi Green Energy and Jinko Solar both reported a net loss of 1.4 billion yuan, $193 million, for the first quarter, while losses for peers Ya Solar and Trina Solar totaled 1.6 billion yuan and 1.3 billion yuan, respectively. LONGi, which also turned in a net loss of 8.6 billion yuan for 2024, told analysts in a call that demand for solar products was expected to be flat year-on-year in 2025.
Middle East Crude-Benchmarks Oman, Dubai and Murban fell further on Wednesday as oil prices extended declines to the lowest level in over 2 weeks. Both Brent and WTI were set for their largest monthly drop in almost 3.5 years as the global trade war eroded the outlook for fuel demand, while concerns over mounting supply also weighed. Meanwhile, the official selling price for Oman crude in June will fall by $4.64 to $67.87 a barrel, Reuters calculations based on data from the Gulf Mercantile Exchange showed on Wednesday. Next, we have the top news in metal markets. Copper prices fell over 2% on Wednesday, heading towards their worst month since November amid weak data from top metals consumer China and lingering trade uncertainty. Benchmark copper on the London Metal Exchange fell 2.2% to $9,231 a metric ton by 10:45 GMT, its lowest level since April 17. Prices fell 5% in April. The COMEX copper contract was down 4.3% to $4.63 per pound, lowest since April 17. Data on Wednesday showed that China's factory activity contracted at the fastest pace in 16 months in April, keeping alive calls for further stimulus.
Iron ore futures edged lower on Wednesday, posting a third straight monthly decline amid the possibility of steel output cuts in top consumer China, while demand slowed ahead of the Labor Day holiday. The most traded September iron ore contract on China's Dalian Commodity Exchange ended daytime trade 0.78% lower at 703 yuan and 50 fen, $96.81, a metric ton. The contract lost 3.96% this month. The benchmark May iron ore on the Singapore exchange was 0.67% lower at $97.08 a ton, as of 0711 GMT, losing 3.16% this month.
We will now look at the top news in the agricultural sector.
Chicago wheat futures rose for the first time in 3 sessions on Wednesday, with bargain hunting supporting prices, although much-needed rain in the U.S. crop belt kept a lid on prices. Corn and soybeans slid, with both markets facing pressure from rapidly advancing U.S. planting and the Washington-Beijing trade war. The most active wheat contract on the Chicago Board of Trade was up 0.2% at $5.26 minus 3/4 a bushel as of 10:42 GMT, after dropping around 2.5% on Tuesday.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.